Ladies and gentlemen, good day and welcome to Imami Limited Q2FY25 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant line will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, you may signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Percy Panthaki from IIFL Securities. Thank you and over to you, sir.
Hi, good evening, everyone. We are pleased to host the quarterly con call for Imami Limited. On the call with me, I have Mr. Mohan Goenka, Whole-Time Director and Vice Chairman, Mr. Vivek Dhir, CEO International Business, Mr. Gulraj Bhatia, President Healthcare, Mr. Manish Gupta, President Sales, and Mr. Rajesh Sharma, President Finance and IR. I'd now like to hand over the call to the management for their initial comments, and then we will open up for Q&A. Thank you.
Thank you, Percy. Good afternoon, ladies and gentlemen. Thank you for joining us today for our earnings call for the second quarter and half year ended 30th September 2024. At the macro level, the quarter presented some challenges with demand trends similar to the first quarter. High food inflation has continued to impact mass consumers. On the international front, political unrest in key markets like Bangladesh posed some temporary hurdles. Despite these headwinds, I am pleased to report that we delivered profit-led growth this quarter, underscoring our resilience and strategic agility. Our consolidated revenues at 891 crore in quarter 2 grew by 3%, while the first half of FY25 saw a 6% growth with revenues at 1,797 crores. Our domestic business also grew by 3% in Q2, led by double-digit gains in some of our key brands. Navratna and Dermicool grew by 10%, while the healthcare range grew by 11%. Pain management range grew by 5% and BoroPlus delivered a growth of 2%. Kesh King and male grooming declined by 9% and 13% respectively. As you are aware, we acquired the balance stake in our strategic subsidiary, Helios Life Science, from the erstwhile promoters. Due to the transition and change of management at Helios, we experienced a one-off decline in revenues in quarter 2. We are confident that the business is poised for a strong growth in H2. Our pace of innovation continues with launch of 2 new products under Dermicool, under the brand He, and 3 new launches on Zandu Care portal. Further, we relaunched our light moisturizing cream under the name of BoroPlus Soft in a fresh new look. Light moisturizing cream segment is highest growth segment in skin care currently. And we believe with the strong association of BoroPlus mother brand with moisturization, care and trust, BoroPlus Soft has all the potential to become a very significant player, not only in the segment but also a significant value driver for the BoroPlus portfolio. Our channel play continued to evolve as sales contribution from organized channels, that is modern trade and e-com, and institutional sales at 26.6% of domestic business increased by 190 basis points in the first half of the financial year, growing by 14%. Our international business showed resilience in the face of geopolitical challenges with sales growth of 12% excluding Bangladesh. Overall, our international business grew by 6%, both in constant currency terms and in INR terms, led by a strong performance in the MENA region. In the first half, international business grew by 9% in the constant currency and by 8% in INR terms. The situation in Bangladesh has improved from the lows of July and August. However, challenges like rising inflation, depleting forex reserves, along with political instability, continue to impact the business. We are confident of maintaining our market shares even in troubled times. In the second quarter, our gross margin expanded by 60 basis points to 70.7%, while EBITDA grew by 7% to 250 crores, with margins expanding by 110 basis points. Profit before tax rose by 13% to 220 crores, accompanied by a 220 basis points margin expansion, and profit after tax surged by 19% to 213 crores. For the first half of the financial year, gross margins expanded by 140 basis points to 69.2%. EBITDA at 467 crores reported a 10% growth, while PBT surged by 15% to 399 crores, and PAT also rose by 16% to 365 crores. These results highlight our ability to deliver solid financial performance even amid challenging conditions and set the stage for a promising second half. Consequently, our board has declared an interim dividend of 400%, amounting to rupees 4 per share for FY24. As we look ahead, we are optimistic about a strong recovery in the coming months. With the relaunch of Fair and Handsome set for in Q3 and our focused interventions for Kesh King, we are confident that these brands will bounce back and start contributing to the growth in H2. And with a good winter season forecast, we remain committed to our goals of high single-digit revenue growth and double-digit EBITDA growth for FY25. And we are progressing steadily towards achieving these targets. We remain focused on driving sustainable volume-led growth by expanding our distribution reach, investing aggressively in our key brands, and capturing market share across our portfolios. With this, I open the floor for Q&A. Thank you so much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have first question from the line of Harit Kapoor from Investec. Please go ahead, sir.
Yeah, hi, good evening. So just on, the two brands that have struggled a little bit, Male Grooming and Kesh King, both have seen kind of, 5 quarters of decline in terms of brand growth. Could you just highlight, Moonji, about, how you are looking, what are the kind of key steps in this new phase of relaunch in Fair and Handsome? Any light you can give on that? And secondly, on initiatives in Kesh King that you are taking to make changes in this brand. Thank you.
So Harit, you are right that these two brands have been struggling for some time. Kesh King, particularly the oil, and Male Grooming for some time. So I think I had mentioned in the last quarter con call that for Kesh King and BoroPlus, we have engaged BCG, for the growth of these two categories. They started the work in August. Of course, they will come with some solutions in the next 6 to 8 months. Hopefully, after that, once we implement their strategies, we will see a significant growth in the Kesh King category. As far as the Male Grooming is concerned, we have relaunched the Fair and Handsome just about in this month. There is a substantial change in our relaunch with a new brand ambassador, young brand ambassador. So hopefully with all these changes, even Male Grooming will show signs of growth. We are very confident of these two brands going forward now.
Yeah, just to follow up on each of them, apart from, changing communication and brand ambassador, is there anything else? Is there a packaging, formulation, any other change that has been made on Fair and Handsome pricing, etc.?
So Harit, yes, there is a packaging overhauling what we have done here, and yeah, we are changing. We are wanting to go into a larger Male Grooming space from Fair and Handsome. So we are working towards that, and you will see a significant new launches coming up in the fourth quarter or in the first half of next year.
Understood. And just to follow up on Kesh King was that, it seems like category growth is the challenge because you are, driving significantly. So you're continuing to see market share improvement. So, how does one address the category growth challenge? Does one, have to push move Kesh King out? I mean, extend the brand. Is that the best way to drive? Because, category growth is, it's hard to mend the problem of category growth. So just wanted your initial insights on how you are thinking about, what the real challenge is there, because category growth seems to be the problem on the oil side.
Yeah. So Harit, Kesh King is a anti-hair fall, category. It's an expensive oil, as you know. So and it sells in the mass consumers. Okay. So because of inflation, of course, there has been challenge as far as this oil is concerned. Shampoo is still doing better than the oil. Now the only way to grow is hair fall is a big problem, and we don't see any reason that this category will not grow in future. Of course, we have faced some challenges from some startups, so people are trying new products into the category. But whatever said and done, as I said, BCG is actively looking at this Kesh King strategy, and we have planned a significant growth in shampoo for the time being. Once we are ready with the Kesh King oil strategy, we will roll it out. And yes, I agree that we will be launching some extensions to Kesh King oil.
Got it. Thank you so much, Mohanji. I'll come back for more. Thank you.
Thank you very much. Before we proceed with next question, we would like to remind participants that you may press star and 1 to ask a question. We have a question from the line of Prakash Kapadia from Spark FPMS. Please go ahead, sir.
Yeah. Two questions from my end. Can you give us some sense on what is happening in rural and urban markets? And, going forward, what are your thoughts in terms of growth drivers for us? And secondly, if we look at, the journey of Emami, the moat in general has been, distribution, direct and indirect expansion, penetrating rural. Then, modern trade came in. Then e-commerce came in. And now, quick commerce has come in. So how are, we gearing for this change and evolution in terms of distribution changes happening in the industry? And, where are we in terms of, capability, in terms of mix, what is happening in modern trade and e-commerce, and some thoughts on, general trade and quick commerce?
Okay, Prakash, we have Manish, who is the President Sales on the call. Manish, can you give the answer?
Great question. So, first of all, as Mohanji said in his opening address, modern trade and e-com are now contributing a large good chunk, and they're the fastest growing channels, like it's growing for most of the other companies, and rightly so. We might have been a little late to the party, but currently we are trending in line with the contribution channels in MT and e-com. Within e-com, quick com, of course, is the fastest growing channel. Just to give you an idea, in quick com over the last 6 months, we have kind of 2x our number, and we're thinking that over the next passing quarters which will come in, this is going to grow faster. So, and we are investing both in terms of resourcing and attention and investments to double down on that group. Now, having said that, as you said, the traditional strength of Emami has always been the GT side as well, and I'm happy to share that on the GT front, we have done a lot of great stuff over the last many years, where rural continues to be a stronghold, and we have further tightened our resources there. We have also started looking at premiumizing our general trade channel via initiatives into the supermarkets, the marts, and the standalone stores, because they are becoming a big force and a shopping avenue for the urban consumers. So we are tackling each one of them. Our prime focus right now is to stay strong in rural, premiumize urban GT, stay strong in modern trade, double down on the quick commerce, right? So because the consumers have become multi-channel, the shopping behaviors are changing very rapidly. And in tune with that, we are investing in each of the channels to capture the
Okay. Okay. And modern trade and, e-commerce would be what? 15%-18% for us as a
about 25 plus now.
25% plus. Okay. Okay. And Mohanji, on rural and urban, some thoughts?
So as Manish said, Prakash, that rural has done slightly better than the urban markets. Okay, but there is not much of a difference. Of course, in the third quarter, which is mostly led by Boro Plus antiseptic cream, and majority of it comes from the rural markets. So we will have to see how the third quarter pans out to be.
Okay.
But we have a very, very robust distribution in the rural markets, So if the winters are strong, we will see a significant growth in the third quarter.
Okay. At least forecast seems to be of a very strong winter, is what we've been
Yeah,
reading.
the forecast this year is strong winter, yeah. And we are seeing some signs of winter in the north now. So that's what we are. Our market is saying that stocks are now moving from the markets.
Okay. Okay. So the channel pipeline is started.
Yeah. Now it is getting.
No. And you alluded to Kesh King, and you gave some insights into BCG, but some of this was tried earlier also because we changed the packaging, we tried smaller packs, we tried and expanded the market, we went to rural, but somehow that volatility or growth seems to be missing despite some of these initiatives which were taken earlier also. So what is surprising is despite it being a problem solution area, it's facing such challenges despite not being such a large category. So what are we missing, or what is the consumer thinking?
So Prakashji, I see honestly, you are right. We have been trying on this category, and we have a strong belief in Kesh King because it is anti-airfall. And see, our job is to keep on trying till the time we succeed. So it's a big category. We see a huge future in shampoo and also in oil. So and BCG is, as I said, hopefully they should come up with some great solutions. We are ready to invest any amount of money behind Kesh King, very honestly.
Okay.
Yeah.
And some of these initiatives should start reflecting from Q4 onwards, or next year we should see?
No, so hopefully from Q4 onwards, because actively the research is undergoing. So once they give some idea, we will roll it out quickly.
Understood.
Like I said, we will be disproportionate spends on Kesh King, because we really see a big potential behind Kesh King.
Understood. I'll join back if I have more questions. Thank you.
Thank you very much. We have next question from the line of Shirish Pradeshi from Centrum Broking. Please proceed with your question.
Hi team, happy Diwali. Just a few questions and observations.
Slightly louder, Shirish. I can't hear you very clearly.
Yeah. So just few observations. So far, most of the companies has highlighted to protect the channel hygiene. Companies has taken some inventory cut and taken a pause on the primary and focus on secondary. Second, we also understand few companies have highlighted there is an urban slowdown in consumption. So in your lens, in your product profile, what is your observation, if you can give some depth?
Manish, will you take this question?
For a channel inventory is concerned, we have issues in certain areas, but it's not as large an issue as some of our competition had to get into the stage. We are a pretty decently well-managed, well-oiled system. And to take care of our profitability of our partners and distributors, time to time we keep giving, whether it's a credit support or other things, to ensure that the pipelines are right. So you must understand that we are a seasonal business in 2-3 categories. So we do undergo shift of inventories and all that, but largely it's not a concern that we have to go to the extent of cutting down big time or something. Small corrections here and there, we keep taking month-on-month, quarter-on-quarter, wherever required. Now, as far as the urban and rural mix is concerned, as we said earlier, for us, the story is quite uniform. We are by far the number one brand in most of the big categories that we operate in. So we pretty much drive the growth both to urban and rural stuff. I hope it answers your question.
Yeah, Manish, I understand what you're saying, but just to give you a point of view, pain management has grown only 5%. Even BoroPlus is also grown only 2%. Despite you have taken some new product launches. So, I mean, the season has not panned out the way it was expected for pain management, especially for balm. And even BoroPlus, I was expecting the loading would have started happening. So, inventory is an issue or there is something else?
No. So BoroPlus is very simple. We are looking at quarter 2 number, which is July, August, September. Over the year, the loading for the winter season, most brands would like to do it from October, November onwards and not September onwards. As Mohanji mentioned earlier, we are taking a conscious call that we load in line with the season of sale rather than to chock-a-block our pipelines for the distributors and the capital. So October onwards, that story will start. There might be some debate here and there, but that's fine. We are very confident on the BoroPlus side. As far as the pain management is concerned, from the quarter half 2 perspective, that quarter 3 is our biggest season, right? As we get into winters and onwards. And category is going well, both in urban and rural. Country is going very well there. We don't see any major reason for an alarm there. I mean, even if you look from a share perspective, we are either maintaining or growing our shares. So that's good.
Okay.
In fact, the good point I would like to share is we are now seeing an increased participation from modern trade, quick commerce, towards the OTC category especially, because they see some of them, especially in quick commerce scenario and e-com scenario, they lend themselves to a better category fit when it comes to impulse and emergency solutions. So we are conscious of that opportunity and we want to capitalize on them as channel mix changes.
Sorry to little harp on this point because over last 4-5 quarters we have spent significant amount of money on Project Khoj. So I mean Project Khoj is primarily was to our understanding was improving throughput, and if the category has been seeing this kind of input, the sales is not in tandem. So that's why I was a bit worried and asking this question.
No, I understand that. See, Project Khoj was about creating our hubs and spokes into the rural market. Over the last 3-4 years, that work has been done. We have expanded our villages, we expanded our hub and spoke, and now Project Khoj has officially internally been called off because it has done its job. Now we are in the process of gaining the fruits from that through our GTM network, through our reach, right? But to say that we are not using the thing, I'm not sure if that's the right way to do it. Market shares are growing on the category. I mean, that's a good proof of that we are gaining from it.
Okay. My second question...
Shirish, just to add on Manish's point, see, any investments that you do, you don't know how the markets would behave. You all know that rural markets or whether urban rural, there is some level of stress, as far as the consumer demand is concerned. So these are investments for a very, very long-term investment that we do in rural markets or growth or expanding outlets in the rural markets. Once the market bounces back, we would be preferably the companies who will benefit the most.
I understand. I'm completely with you, Mohanji, because you guys are spending more than the industry average. But then the question is that it's not sufficiently getting us to the revenue momentum. That's the big challenge.
But I don't subscribe to what you're saying, Shirish, because honestly, if you see the challenge that is on few brands, some of the other brands are still doing much, much better and growing faster than the category.
Okay.
So some brands are, dragging the number down. Otherwise, we would have done much, much, much better. Kesh King and male grooming, and also we did not load BoroPlus in the second quarter. So these are the key reasons. International also was double-digit growth if you would see in the last 5-6 quarters. Because of Bangladesh, we could not grow. Otherwise, our growth could have been easily 6 to 7%. Okay. And also the Man Company, because of the transition, you have seen the growth in the Man Company. And Man Company has not grown. In fact, it has declined in the second quarter. So these are certain, transitional things that we will have to take into account. I think the brands are very, very robust in these tough times. Let me be very clear.
Okay. My second question to Gulraj ji, what is this driven by 11% growth? Is that the channel specific, if you can give color? Because Manish just said that the modern trade and e-commerce is showing a lot of momentum. So maybe if company's average contribution is 26%, is the modern trade is really driving the growth, or GT has also been flaring? And some color on the Zandu online, what are the numbers?
Yeah. So thanks, Mr. Shirish, and I'll answer both the points that you raised on channel and the online contribution. So from a channel perspective, the growth has been driven predominantly by the GT business in terms of having performed well on the OTC side and on the medical or Ayurvedic medical business, the pharma Ayurvedic business. Online has also done well, especially e-com. But since the contribution is relatively smaller yet for e-com modern trade, obviously they've done better than the GT growth. I mean, for the last few years and hopefully over the coming years also, both e-com and modern trade will perform better than the GT business. But the GT business also done reasonably well in terms of driving this 11% growth. Coming to the online part, the online business, the Zandu Care, we've done well both on Zandu Care and we now have a fairly robust product portfolio which is doing well both on Zandu Care, and we also, as you know, extended it into modern trade. We've always been selling it on Amazon and other e-com marketplaces, and they're also doing pretty well. So from an online perspective, we are focusing on 3 channels: our own portal, Zandu Care, the various e-com marketplaces, and modern trade, and all 3 are doing reasonably well.
Okay. That's really helpful. Mohanji, my last question, you said that you are quite optimistic. So give us some 2-3 parameters on which you are confident that things will change in quarter 3, quarter 4.
So Shirish, as I said, see, one is Bangladesh is, as far as international is concerned, I think it was due to the Bangladesh market. That will grow in the third quarter. Again, the Man company, which was doing exceedingly well because of the transition, it degrew in this quarter. But I am hopeful that in the third quarter, it will again start growing. That is the second. Male grooming is a complete relaunch we have done in the month of November. So hopefully maybe if in this quarter or in the next quarter, you will see a significant growth coming in from male grooming. Kesh King may take some time before we get the results from BCG. And we are predicting a good winter this time. So if the winters are good, then hopefully that should give us at least 1 or 2% additional growth. That's what we expect at least 7%, 7 to 8% growth in this quarter.
So I mean, in the presentation, I saw that there is a relaunch of he, and now we are getting into even the perfume and eau de cologne. So is there any strategy for this segment to look at, or is this just going to complement our male grooming portion also?
No, so he was always a male grooming, we only had deo, and these are only to target, some upmarket consumers. If you had seen the packaging of he, it targets to a very, very urban consumer. We are trying only in e-com right now. If we see some momentum, then we will go into the modern trade.
Do you have any particular target for the new product contribution for the FY25?
We have a target which is about 1% of our sales. So that is what is the target. But it all depends. Some products get delayed in launches. Then the targets come down.
Okay. Thank you and all the best.
Thank you.
Thank you so much, sir. We have next question from the line of Naveen Trivedi from Motilal Oswal. Please proceed with your question, sir.
Yeah, hi. Good afternoon, everyone. So my question is again on the BoroPlus range. So last year we had seen a weak revenue growth year, and on top of that, if I look at the first half number, also we had done around 3% growth. Although you did talk about the second half sort of pickup should be there, where our base numbers are also favorable. But looking at the annual numbers, do you think this BoroPlus as a range can do around high single digit to low double digit range if the winters poised well for this year?
Oh, definitely, Naveen. I expect if the winters are good, we must see at least a double-digit growth. Why single-digit growth? Even if the winters are not so good, we will definitely expect about 7-8% growth in the BoroPlus range. You have seen the summer, the summer was strong this time. We grew disproportionately in our summer brands, right? So if the prediction goes right, we expect better numbers for sure.
So this double digit you are saying for the second half, or you are saying for the year first?
Full year, for the second half basically.
Sure. And if you can also give us some sense about, because we have done a lot of brand expansion under BoroPlus through soaps and face wash and all. So if we combine all extensions, what is the mix of the initiatives which we have driven? How much they contribute to the brand?
So BoroPlus antiseptic cream, then we have BoroPlus winter lotion, then we have BoroPlus soap, and then aloe vera gel, prickly heat powder. These are some of the categories, under BoroPlus, and now recently again relaunched BoroPlus Soft. These are some of the categories. So about 76% is antiseptic cream, balance 25% is the rest of the categories.
Sure, sir. Sure. And just one thing on the Helios, you mentioned about the quarter two had some 9% decline because of the ownership change. Do you think we will be able to recoup in the second half? Or you think that now the second half will be as normal as we have seen in the first quarter?
Sorry, which category you asked?
I'm saying the Helios, the main company, we lost 9%. Yeah.
Okay, yeah. So Helios, the transition is still on. So hopefully it would be completed by mid of November. And then we expect the growth coming in. Hopefully this quarter should grow. Not so handsomely, but yeah, we will see some growth in. But fourth quarter should be better than the second and the third quarter.
Sure. Thank you so much, sir. That's all from my side.
Thank you.
Thank you. We have next question from the line of Vishal Gutka from HDFC Securities. Please go ahead, sir.
Yeah. Hi, team. I just want two questions. First is on KSK. So how do you see competitive intensity in wake of Tesla being acquired by Dabur, given that it has a much resource in terms of competition? And on the other hand, you have brands like Adivasi Oil, which are selling at a very aggressive discount, given that they're getting shelf space now. So just wanted your view on that. And second, on pain management, growth of 5%, although my thought process was that monsoon season or the second quarter is a very important quarter for the pain management portfolio. So just wanted to hear your thoughts that why growth has been subdued. You already highlighted that some winter also played an important role in driving the performance of pain management. Thank you.
Yeah. So we will have to wait and watch, Vishal, how the competition does what they do. As far as we are concerned, we never take anyone lightly, and we are framing the strategy for Kesh King, I mentioned. So, and I also mentioned that we will spend disproportionately on Kesh King because we are very, very bullish. Adivasi Oil doesn't, conflict with our consumer base. Adivasi Oil absolutely goes in the new consumer. That will grow the market further, I believe. And pain management, yes, 5% growth we had in the second quarter. But the third quarter we have started handsomely, at least in the month of October. So, and as Manish said, that the categories are also growing. We are also seeing some growth coming in from quick com and e-com under pain management. So hopefully we will see better numbers in the third quarter.
Great. The last question from my side on urban demand. Because most of the companies have like a stress in urban demand. What is your assessment? How are you doing going forward urban demand with regards to the portfolio that you have?
So, Vishal, Now we are getting a new mix. You would see that 26% of our business now comes from MT and e-com. That is primarily urban. And some of the new categories that we are coming in are also urban driven, whether it is He, Man Company or Brillare. Some of these brands are mostly urban brands. So we will have a good mix of urban and rural going forward. We are still very, very bullish on the premiumization. We will keep on launching some of the brands or products under our existing brands. So, yeah.
Great. Thank you, and wishing you all the best for future quarters.
Thank you.
Thank you very much. Participants, I would like to remind you that if you wish to ask a question, you may press star and 1. We have a question from Parsi Pantaki from IIFL Securities. Please go ahead, sir.
Hi, sir. Just one question on the sub-segments of hair oil. So, this hair fall defense category, from whatever data you have from syndicate sources or consultants or whatever, do you find that this hair fall defense category is growing slower than the overall hair oil category, or that is not the case?
But see, that's not the case. As I said, hair fall is a big issue, both in urban, rural, male, female, everywhere. Okay. And what we have seen is that some of the startups, there are multiple startups who have launched these hair fall oils, which is mostly sell through e-com. So, that has, I think, slightly dented the sales of Kesh King. So I am not seeing that the category is shrinking or the category will go down, because the problem is not getting solved. Hair fall, in fact, it is increasing with stress levels going up.
So, sir, do you think that there is a case to have different variants within Kesh King with different ingredients, like instead of till oil, you can launch a variant with Bringa oil or something like that, which would help sort of address different kinds of customers with different needs?
No, absolutely. See, so as I said, BCG is on it. Let us give at least 1 or 2 quarters to them. Let them come up with the right strategy, and then you would see a different Kesh King, hopefully.
Right. Understood. Also wanted to understand, see, modern trade, quick commerce, or e-commerce, etc., as you said, is like close to 25% of your sales now, which means as a percentage of urban, it is probably close to half of your sales. And obviously, this number is only going to increase as we go ahead, because these channels are sort of gaining favor among customers. So do you think that from a slightly medium-term perspective, like a 5 to 10 year perspective, if these channels are becoming very heavy, we need to also think of our portfolio from that lens as to what kind of products and what kind of categories would be more amenable to selling in those channels? I know we have now Man Company and some of the other products like that, but do you think we need to do more on that as well?
See, I don't have an answer, very honestly. 5 to 10 years is a long period. But yeah, we definitely believe, as you said, e-com, MT, QuickCom are the new future distribution channels. Whatever needs to be done, we will do to be successful in these channels. If you would remember, about 5-6 quarters or 7-8 quarters back, no one believed that Emami can do 26% from e-com and modern trade, because people believe we don't have the products for modern trade and e-com. But that's not true. So whether it is Navratna or BoroPlus or Jandu Balm or any of these brands, they very well sell in modern trade and e-com.
Got it.
Yeah. Otherwise, how will we get 26% contribution from MT and e-com?
Got it. Just one last question is, you mentioned some time ago that 75% of BoroPlus is antiseptic oil and 25% is the other variant.
Antiseptic cream.
Sorry, antiseptic cream, and other variants is 25%. Would you be able to give some idea as to what this ratio was, let's say, 5 years ago, and how do you think it can evolve 5 years from now?
So exact numbers I will not be having, Percy, but I think 5 years back it would be almost 92% would be antiseptic cream, 7-8% would be other brands. In the last few years, BoroPlus lotion, BoroPlus aloe vera gel, and BoroPlus soap, these have gained significantly.
And do you think this trend can continue, like this 25% can become sort of meaningfully larger over the next 5 years or so?
Oh yes, definitely. So we also believe there is a strong growth potential in BoroPlus, and that's why we have given two brands to BCG. One is Kesh King and one is BoroPlus. Okay.
Right.
A very long-term strategy. Yeah.
Got it, Mohanji. We can go back to the question queue.
Thank you very much. We have next question. Before we proceed with the next question, I would like to remind participants, you may press star and 1 for questions. We have a question from Nitin from Emkay Global Financial Services. Please go ahead, sir.
Yeah, thanks a lot for the opportunity. First question is with respect to digital brand revenue decline of 9%. So when you are talking about transition and change in management, what exactly is all about? Is there any change in the supply chain which is leading to this decline, or is just the top management change that is driving the decline?
It is the top management, because the promoters are now out and they have handed it over to us. So we are now managing the Man Company and Brillare. So it is just a transition, because we will have to take over, we will have to hire people, we will have to do all this. So it is taking 1 or 2 months. That's it. It is just the top people.
So in terms of hiring more people,
there were multiple promoters who were managing this business. All of them are out of this.
Okay, so can we assume that like it was not planned well, or it was bound to happen?
Any transition, Nitin, takes a while. Of course, we plan before we do any transition. Okay, but it is very, very difficult to, know exactly what is going to happen. So this was a big transition, because startups works very differently. And as I said, there were multiple promoters who were driving the Man Company. So now, as it has come, and hopefully we'll see some growth from third quarter. Very recently, for these startups, we have hired a CEO, Mr. Vikas Mittal. So hopefully he has just joined, and now he's going to take over and grow these brands. He's a highly seasoned guy, Vikas. So of course he has targets to grow these Brillare and Man Company. So he also needs to settle down. He has just joined about 10 days back.
Okay, thanks a lot. And second question is with respect to this A&P spending. So there is a cut of around 5% on a YOY basis. So can you consider
come again? Sorry, come again. It is not clear.
No, I am talking from the perspective of A&P spending, advertisement and promotion. So there is a decline of 5% on YOY basis. So this is more related to like the relaunches or the launches we are planning in Q3. That's why there is a cut in Q2, or how should we read it?
So Nitin, if you see H1, if you see the H1, the growth has been almost 7.6%, in the H1. Because of some of the relaunches, and we have cut in the Q2, but we will make it up in the Q3 or Q4. Okay. But we are definitely not cutting down our advertising budgets. Okay.
Yeah. So my point is
Because our margins from day one, I've been telling that our margins are expanding, and we want to invest behind our business, so we would do that.
okay, thank you. So that means that in the second half, we will have a higher into spending.
Yeah, definitely.
Okay. And will that have any
despite of that, our margins will still expand.
Okay. So second half, you are expecting EBITDA margin to expand.
Yeah. So first half also it has expanded. It will continue in the second half. Yeah.
Yeah, yeah. And lastly, on other income, like there is a jump. So any one-off sitting here?
Yeah, Nitin. The other income has primarily gone up because of on account of higher interest income, higher mutual fund gains on liquid investments, and also we are having higher surplus funds this year compared to last year. So it is mostly in normal course of business.
Okay. Thanks a lot.
Thank you.
Thank you very much. We have a question from the line of Ankit Shah from RK Advisory. Please go ahead.
Hi, team. Thanks for the opportunity. So, sir, my first question is on, since we are visible that the A&P spends on the 7 oils in one, so are we planning to grow the brand size going ahead? If yes, then the target if it's possible.
So Ankit, 7 Oil in One is definitely a focus brand. The brand size is around 45 crores in the domestic business. We have been focusing on this brand for the last few years, and it still remains under the focus. So there is not much change in the strategy of 7 Oils in One. It will continue the way it is.
Okay, sir. Got it. So, sir, my another questions will be on if you could share the impact of the new product launches and the marketing campaign that we did in the H1 FY25. If you can just show some light on that.
So, in my con call, I've said we have recently launched some new brands, which has happened in this quarter. We will have to wait and watch, the results in the subsequent quarters. So, I have been maintaining this, that we will be aggressive in our new launches going forward also. And the total new launch contribution we expect is around 1%.
Okay, sir. Got it. That's all from my end. Thank you.
Thank you.
Thank you. We have next question from the line of Shirish Pardeshi from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. Rajesh, just quick question. We have taken some MAT credit. So just wanted to understand the tax rate for and how much MAT credit is available for the second half.
So for H1, the average tax rate is around 9%. So for the full year also, it should be in the range of 9 to 10%.
Okay. That will remain at 9 to 10%.
Yeah.
Okay. And the second question is that with TMC coming under our belt, do you think we will do the in-house manufacturing or we will continue the manufacturing supplies from the outside?
No, we will continue the way it is, Shirish. We are not changing anything right now. It will come from the existing units.
Yeah. Okay. No, I was just saying because now you have control on the company. So if the profitability is going to be taken at some point of time in future, what will be the course of action?
No, so right now we don't have any plans to move the factories to move the operations. It will gradually happen if it happens.
Okay. And just one more question on the TMC. Once now we have, so you said that now you're basically now trying to reorganize and get it merged. So initially we have seen some feedback from the channel and trade. But if we build, say, a number for the next 2 to 3 years, what kind of potential this brand can become? I mean, both these digital brand, as per your estimate, you are saying about 200 odd crore. So how much the growth, especially for TMC, can happen, and what are the growth drivers, and what are the channel expertise we will try and establish?
So Shirish, Man Company is about 180 crores. At least in the next 3 to 4 years, we expect the sales to go to about 300-350 crores. That's what is the target given to Vikas. And of course, it sells mostly through e-com, and we will roll it out in some other channels going forward. We are also seeing substantial reduction in costs, and that would be deployed in advertising. So, how we operate other Emami brands? Similarly, we will also operate the Man Company.
Okay.
Of course, the contribution will be far more from digital or e-com and MT.
Okay. Okay. And any word on the Axiom? What is happening there? I mean, last time we had the update about 2 quarters before the plant is going to get rescheduled. And is the production and the product is started going into the market?
Yeah. So, Shirish, yes, the production is on from Jammu. Of course, this is an off-season for juices. Now, the next year, we will be supplying from Jammu only.
Okay. Thank you, Mohanji, and all the best.
Thank you.
Thank you very much. As there are no further questions from participants, I now hand the conference over to management for closing comments.
So thank you everyone for joining us today for our Q2 earnings call. Thank you IIFL, thank you Percy for arranging this call for us. Thank you.
Thank you.
On behalf of IIFL Securities, that concludes this conference. Thank you for joining us. You may now disconnect your line.